Hello, ladies and gentlemen. Thank you for attending this event. I'm Zahreddine Touag, so I'm the head of trading at Woorton. For those who don't know Woorton, we are a market maker making market on several exchanges and recently deploying on decentralized exchanges. Today we'll talk about the role of exchanges in the digital asset space. We'll have key players, so Zhou from Binance, Rahul, Khanna from Bithumb, Yoni, Assia from eToro, as well as Woodford from SeedCX. So I'll introduce you to all of them. Wait, your time. Yoni, it's that way. Wei, Yoni, Edward, and Rahul. So thank you guys for attending this event. Real pleasure to have you here. So to start a little bit and to warm up, can you just present yourself in like 20 seconds and what you do?
Sure. Hello guys. I'm Rahul. I look after Bithumb's European expansion as well as the institutional business for Bithumb Korea Exchange.
Hi everyone, I'm Edward. I'm the CEO of SeedCX, which is a US-based institutional exchange.
Hi, I'm Yoni. I'm the CEO and founder of eToro, the largest social trading network in the world with 10 million users who can trade stocks, commodities, indices, and cryptocurrencies. And yesterday we just launched eToro X, our crypto asset exchange.
Hey everybody, my name is Zhou. I'm the CFO for Binance. I'm just here to put a face to Binance other than CZ. So, hi everybody.
Thank you. So we just spoke a little bit about regulation just before, and we'll keep going right here. So guys, how do you see the regulation, and how do you see the level of regulation, the right level of regulation to innovate and to kind of develop this digital asset space and not to be too much controlled or stopped in your development? What is the right level for you, and how do you see this kind of difficult equilibrium? Way, if you can start maybe.
Yeah. So from regulation, I think. At the end of the day, technology is going to run ahead of regulation, and regulators around the world are basically playing a catch-up game with our industry. And for us, we're basically I think for us, the focus initially, I mean, it hasn't been on regulation, has been more focusing on just technology and grow the industry and grow our business. But I think as Binance has matured over the last 2 years, and we've only been in existence for about 1.5 years, to be honest. So for us, we're basically getting more resources now internally to start engaging regulators in different regions around the world. If you look at sort of the two major things that we've done this year is we launched a regulated exchange domiciled out of Jersey that covers fiat to crypto. And then we're also turning on Singapore later this month, which is also going to be a regulated region. I think you're going to start seeing Binance becoming, I think, more regulated in a way. And then, I mean, because I think 2 years ago, like nobody knows what that means. But I think over the last 2 years, there've been more, actual rules that are sustainable, both for business and for, I think, more mass adoption. I think with those clarity, it actually becomes a little bit easier, at least, to understand what you have to do in your business. Because I think 2 years ago when we launched, like, there's no clarity.
So the story for us is a bit different because we started as a regulated firm. So we're regulated now in Europe, UK, US, Australia. And our approach was always to run all of the crypto business under the regulated entities. And we did a lot of, I would say, joint learning and education with regulators to explain what we're doing and how, despite the fact that the majority of crypto assets are defined as non-financial instruments, for example, in Europe, we still have all of the same processes, both for KYC, for AML, for non-conflict of interest, etc. And we treat it the same level of due diligence, same level of regulation to crypto assets in eToro than we do with other assets like equities. I think the lack of clarity in the space is not that good in general for institutional investors, but I think it does drive innovation, because a lot of innovative technologies that we see, it's very hard to sort of put them in the current boxes of regulation. And what, our ideal envisioned future is regulators who are very sort of technology oriented. I think that's the really big opportunity of blockchain, is to actually significantly improve regulation and actually reduce requirements of regulation from sort of legal accounting and sort of things that happen on a quarterly basis to actually technology interfaces and understanding sort of how can we offer non-custodial solutions, how can we enable more freedom to clients, how do you do smart contract auditing, how can a regulator get visibility into basically the blockchain assets and sort of the processes of reconciling crypto assets. So I think there's a huge opportunity for regulators to actually gain from sort of the blockchain industry, but it's a process that I think we'll see happening in the next 3 to 5 years.
Yeah, maybe to add to that, I mean, I think sometimes there's a misnomer that regulation is the goal. Our view is that regulation is the baseline, being a regulated entity. But you need to go above and beyond that. And to Wei's point, yeah, regulators do not understand absolutely everything, and so you need to go above and beyond. So just to give one example, at SeedCX, we ban all employees trading cryptocurrencies. And the reason for that is because there's a very clear possibility for employees at exchanges to basically front run their customers or have insider information, and we want to be impartial. No regulator tells us to do that. To give another example, we surveil our market, so we do not allow for wash trading and for other manipulative practices. On our spot market, we are not required by any regulator to do that. So we go above and beyond what the regulators say. We think that's what our customers want. But in terms of kind of regulatory clarity, I think there's always going to be, with any new aspect, there's going to be these jurisdictional fights. But at least in the US, there's kind of two areas. You're either a commodity or you're a security, and that's a pretty clear distinction. And you need to work with regulators to get that through. But it is complex in the US. It's a patchwork of regulation. So just to kind of give you some concept, we're regulated in over 30 states. We're regulated by FinCEN, which is a federal regulator. We're also regulated by the CFTC as a swap execution facility. So we deal with a lot of regulators. We feel that that's a needed thing, because to put your hands up to federal regulators and say, look, you're not sure, we're not sure, but we're still going to do it. We think it's the educative process and going to be above and beyond what regulators say is kind of our approach to this space.
Adding more into that, I think for Bithumb, I think we kind of started in Korea way back in 2013, before we saw the whole market going up in hundreds of billions of dollars and pounds. Korea on the other side has been very neutral towards crypto assets. We haven't really seen any licenses for exchanges. We haven't really seen, on top of that actually, rather than licenses for exchanges, we have actually seen bans on ICOs. So in certain side, regulators are quite concerned in Korea. They see exchanges are bringing a lot of volume. They are bringing a lot of revenues, but a lot of investors are also losing money in the ICO world and also in the cryptocurrency world. And what we need to see really from Korean authorities is a neutral and also a positive approach for exchanges, ICOs, as well as other blockchain companies. Outside Korea, I think things are quite good as far as I can see, especially here in Europe. European side, we are registered in London. We are currently speaking to FCA. We are in touch with several other regulators, like the regulators in Luxembourg, BaFin in Germany. Again, the approach we have seen from the regulatory side in Europe is not really active approach, where they are saying, okay, guys, you can come in, get your licenses from us, and start operating under the European single market access. The license we are, basically the license we have access to right now is the same traditional licenses, which are e-money licenses, or you could have a financial institution license, which are, I think, not really fit for purpose, for crypto exchanges. Crypto exchanges are operating in a very different markets. Some of these assets are clearly not security because the behavior is not there. There is no, like in a sense, let's say if you're a utility token, you're not really distributing dividends. You can't be a security. But then how can we operate under a traditional securities license and run a cryptocurrency exchange? So I think for us really is the interesting thing I think really I've seen yesterday from the panel by the European regulators is I think the approach the French government I think is taking is quite good. And if we do see a collaboration between the different regulators, like the regulators in the UK, FCA regulators in the French government, AMF, and the Luxembourg and the BaFin in Germany, and if they all come together and work under a same umbrella, I think that would be very healthy for the ecosystem.
Thank you. You mentioned, Edward, wash trading and those type of behaviors. These kind of behaviors and fake trading has been in the news everywhere recently. So basically, those fake volumes have been targeted by Bitwise, the study very recently. I saw that Binance also kind of partnered with some actors also to help them kind of have a healthier data and a more accurate data. What can you tell us about those behaviors and what it shows also to the ecosystem and the way you kind of react facing those acts and the way you in your businesses you help your customers and all your partners kind of avoiding those things?
Yeah, so I think there's kind of two parts to that question. I think the first part is chain analysis, right? Making sure that that the assets coming into the space are not illicit. I think that's one part of it, and I think that's the announcement that Binance made more recently. I think the bigger thing is around the actual market. And basically, for those not familiar with wash trading is essentially trading with yourself, essentially, to either increase volume, so to basically artificially inflate the volume that your exchange shows, or also to basically try to manipulate the price, because if you push up the price on one exchange, you may be able to take a position on an actual exchange, and that price may also increase. I think there was a report the other day that said, and I think this is an elaboration, but 95% of volume in this space is fake, which is a pretty dramatic statistic. I can only talk about our experience. So we do monitor for wash trading. We do monitor for these things. We think it's important. But even after saying all these things, we are highly regulated in the United States. It is a criminal offense to wash trade. Even if you're not regulated, it's still criminal. And we say these things publicly. We still get approached on a weekly basis from groups who say, we will wash trade for you. And do you know what's quite interesting? The price of wash trading has come down as the price of crypto's come down. So even the crooks are finding it hard to make money in this space. And so, you can get wash trading for about $5,000 and they'll wash trade $100 million on your exchange in a month. That's pretty cheap. And I get offered that once a week. And the answer is always no. What you're doing is illegal. That's the end of the discussion. But clearly, this is going on, and people aren't saying no.
Yeah, my answer is basically goes back to do your own research. I think all of this stuff came about because there's, I don't know, it's egos or whatever, but like most people in the industry initially get introduced to crypto through CoinMarketCap.com, which has this thing called rankings. There's a reported volume versus adjusted volume, right? Like all of that comes from it. And then for a lot of the newcomers to this industry, a lot of the upcoming exchanges, basically, for them to get their rankings up to CoinMarketCap is a good way for them for marketing, et cetera, et cetera. So there's that incentive structure for them to get up that ranking, and there's no negative incentive structure, at least to date, for them to get punished by it, right? Because there is, right, until, but I think market is evolving. Right now, you can basically have more third parties coming out validating trading volumes on the various exchanges, right? Saying that, and there's actually more pressure now for Luke at CoinMarketCap CMC to basically, monitor and adjust his things accordingly, right? So I mean, I think it goes back to basically this is a very young and early industry, right? And it goes back to basically I think to what some of the panelists says, basically how do you behave ethically as an exchange. Self regulation to a certain extent is one part of what you do, but the thing is that at the end of the day, I think how do you want to put it? Like users, in our case, vote with their money. Like you basically, who do you trust? And if it's an exchange that fakes their volume, do you really trust them? So I think that goes to the heart of that question. And because I think it's pretty easy to find out, right? Because one of the analysis we do internally is basically what's your volume versus your traffic, right? And then people who are ranking ahead of us, but they have like 1/20th the traffic that we have, obviously there are problems. So.
I think, by the way, this connects to the previous question. So the regulated exchanges probably post 99% real volumes because they're regulated. That means basically they need to monitor, etc. I think we will see in the next 12 months, because it's a heated subject, we'll see more real matrix in the industry. So we will see sort of real volume matrix in the industry versus sort of unknown whether it's real or not real, and I think that would be very healthy to the industry. There are already a couple of websites sort of trying to look at either trade-by-trade data, correlations, etc. That's also a good metric of visitors just to volume, but that's sort of more of an indication. There's actually ways to try and find what's the real volumes in the exchanges, and by the way, a regulated exchange by definition almost, their volumes will be correct.
Yeah, I think one point I would like to add there is I think the key issue we also have in the industry is really the data analytics. So I think Wei has mentioned, Yoni has also touched on the same point, like you have coinmarketcap.com, which is I think seen as the main source of information really. You can go online, you can kind of walk through all different sorts of thousands of different coins. You can also have a look at hundreds of different exchanges. But the problem is the data is not accurate. So you have all sort of people coming in, all the retailers, institutions looking at the data and saying, hey, okay, this exchange is doing 2 billion or 5 billion in trading volume. They must be doing something right. Why don't we sign up? Why don't we join? And that's the key issue. They are supplying the wrong information. And the problem is, the reason they are, I think, getting away with it, really, is they're not doing anything about it, is, again, there is no regulation. So what we need is a global regulation. That's why I think I really call for it, not just from one regulator coming, or like, as I said earlier on, from, either from the UK or from the French government. But I think we need to look out for a global regulation side, which is stopping, I think, these practices, and at least protecting consumer interest and also protecting retailers in the market.
Exchanges have a crucial role, a key role in the space. You are the entrance, and most of the time for new people in the space. It has been launched, so new things has been launched besides centralized exchanges. For example, the initial exchange offerings that Binance launched, the decentralized exchanges that are kind of popping out. How do you see the role of exchanges? How do you see yourself in the future in this kind of space? How do you kind of foster the adoption by being an exchange? Is it through diversification? Is it through kind of changing your way of doing business? How do you see that?
I'll jump in here. I mean, I think exchanges, to a certain extent, in this industry, in the blockchain crypto assets industry, has a proven revenue model, right? So for us at least, we have revenues coming into our business. We're not just spending money and spending money, right? But the thing is that with that sort of revenue coming in, with the profit that we're generating, basically, what are we going to do to basically make the industry bigger, right? I think that's something that we're really focused on. And the easiest way to do that is basically develop more use cases for digital assets outside of basically being traded or outside of fundraising. I think if you look at sort of the 2 or 3 key initiatives that we're raising, is like one of them is basically we think charity is a big thing, right? But so we have a website called the Blockchain Charity Foundation that we funded. Basically, how do we bring transparency end to end from the donor to the end recipient, right? To basically, that's one use case of the blockchain, right? That's one use case where cryptocurrency, you're basically doing seamlessly transferring your donation into the end user, right? And then we're developing case studies in Uganda, basically doing one BNB to feed one child for BNB lunch program. One BNB can feed a child in Uganda for a month. For lunch, give them free lunch for a month. I think that's one use case. And by doing that, you're basically bringing in positive lights to blockchain and cryptocurrency that basically can make, I think, what we call crossing the chasm, going from a niche industry into a more mainstream industry. I think that's one aspect of it. And the other aspect of it that is really, really interesting, I think, that we're seeing is on the next, I would say, titans of the hedge fund industry, right? If you look at the last 20 years, you got like the Jim Simons, you got like the the Citadels of the world, right? That built mega hedge funds from trading equities, right? I think right now what we're seeing is basically a more and more younger, I would say, managers or algo traders or programmatic traders that are coming into crypto assets. And that's native crypto. They don't think, because there's an opportunity here for them to grow, use their skills and to test their algos to basically that, because 5 million in the traditional equity market's not gonna make any impact at all. But whereas like you have a $5 million, you deploy it and you play with it, you have an opportunity to grow your business, right? And these are younger, these are more hungrier, and this is opportunity here. So I think that's one use case, right? How do you help these talented individuals, right? Who just want to trade to build their wealth and to build their reputation. I think these are very different things, but the more use cases you have, like you need one sort of like person on the trading side that's going to come out and be like yada yada, like that's going to drive, I think, more mainstream adoption.
Yeah, I'll call and raise. So I think people sort of miss the big picture. The big picture here is this is sort of rebirth of a completely new financial ecosystem based on very different type of technology. And we're going to see the rise of sort of new bulge brackets, right? So when you look at the Morgan Stanleys and Goldman Sachs and JP Morgans and Citi and Nomura, we're going to see all very sort of traditional, very old institutions, but in order to open in most of them an account, you need to either be very rich or a very large institution. If you want to bank with a large bank for prime brokerage, for trading the global markets, you might need a $20 to $50 million balance sheet or be very rich. So the markets are not accessible because the largest sort of players don't necessarily, it's technology and other stuff, don't sort of enable access to it. This sort of new technology suddenly opens the world of finance. It completely creates a new open financial world where everybody can have access to a new type of technology, and sort of fintech giants will emerge from this, whether it's in the next 5 years or 20 years. We're going to see new giants that basically took the entire existing world of finance and just reprogrammed it as tokenized assets, as smart contracts. You reduce the time and increase efficiency by probably 100 to 1,000x using technology, and the entire world of finance today is completely broken. And I'm saying it because we have the experience. We've been looking at how the FX world works and how the current equities markets work around the world. Nothing from a computer science point of view, everything is broken. This is the opportunity to basically create one global open financial ecosystem that actually enables access to significantly more people, to significantly more opportunities.
Yeah, maybe linked to that. I mean, our view on the crypto space is that we're still early. We're still in the nascent days, and the space is going to evolve. And as an exchange, we want to position ourselves to be asset agnostic. For example, we're regulated on the commodity side, so we can offer both spot and derivatives on that side. But we're also positioning ourselves for what people term security tokens. But securities can include anything, including treasuries. And I think that story is going to evolve. And our view on tokenization is that potentially it could be as revolutionary as it changes the incumbent players in the same way that electronification did to some degree. So if you look at who the big exchanges are, for example, ICE in the US, which is essentially backed, they basically exist because of electronification. They beat the people who did not electronify. And I think that you're going to see the same thing in terms of tokenization potentially. In terms of where we're trying to position ourselves over the next year and as an exchange, is to expand our derivatives offering. So we will be launching, subject to regulatory approval, one of the world's first physically settled forward contracts, and it'd be the first in the United States, and then moving out into options as well. And I think that would be a really big growth area for the whole space, is derivative contracts.
I think adding more into that, I think the tokenization part is, I think, definitely very, very interesting. And I think one thing I would like to add here is patience is really the key. If you go back to the time, we are just roughly over 10 years old in the whole crypto world. The first Bitcoin white paper was published in 2008 in October, and if you look at the timeline, it's only been a decade. Comparing to the market we are going after, which is the capital markets, they've been around for more than 700 years. So it's not an easy task. And then, of course, we talk about regulatory side. We also talk about things like, things we could potentially do, things like moving securities to blockchain, to, like leveraging Ethereum blockchain, for example, or other blockchains. So I think the key here is first of all, we need to really understand the tech. We need to understand what more we can actually do with this, or it's just this is it, or this is just the start, or this is the end of it. But I think, as we believe at Bithumb, I think we are at a very, very early stage, and things we can do more with it is really the tokenizing part, which is moving securities to blockchain, and offering, I think, solutions like derivative solutions, I think is a very interesting space as well. And if you look at the market value of derivatives in the capital markets, it's north of $700 trillion. So we are, I think, if you just look at the value of Bitcoin market cap, is literally equal to one of the largest public company you could probably see in the US. So it's a tiny market we are in.
Thank you. How do you see the role of the banking industry in your businesses? Has it stopped you from growing? Is it kind of a struggle? How do you see your relationship with the banking industry and the role of this banking industry in comparison to the stable coins, for example? And how was your relationship? Can you tell us a bit of insight about that? Because I'm sure the room is very curious about that.
Okay, I'll pick up on this one because I think we were one of the first ones to launch directly access to fiat on and off ramp in Korea. So when we started the exchange, one of the first things we had in mind is we wanted people to allow access to buying Bitcoin and other crypto assets directly with fiat. We didn't go after any stable coins. And I think around that time, there was no stable coin towards the end of 2013. Tether, I think, really started in 2015, I think at the idea stage, and really went live in 2016. Banking has been, I think, a nightmare, especially if you are providing solution for on and off ramp crypto, considering also if you are a not regulated exchange. So things are good in Korea because, again, as I mentioned, the Korean regulator side, they have a very neutral approach, and they are going after the innovation side. They are bullish on the market, and they do see that the blockchain industry could be huge. But outside the Asian market, I think the banking, it is it is a very difficult concept, I think, for, I think it's one of those things when you had the gambling industry started in 2002 and 2003, you had companies coming out of UK, you had companies coming out of Germany, they were all going offshore, they were all going to countries like Cyprus, Malta, Gibraltar, and finding banking partners there. But if you want to be, I think, a like crypto on and off ramp solution provider offering several different crypto pairs, I think what you really need is a large banking provider, a trusted banking provider, not a dodgy bank in Cyprus or Malta.
Oui?
Yeah. So if you look at trading volume in this industry, at like 2 or 3 years ago, I think it was like 90%. It was mostly basically fiat to crypto trading. But if you look at the trading volume today, it's like 90% crypto to crypto trading, and fiat to crypto trading was only about 10% of the volume. And that speaks to basically the critical role that I think that stablecoins currently play in terms of providing that safe haven during bear markets, and also a place to park your assets if you don't want to stay in crypto. But I think from a banking perspective, we're finding it both challenging but also engaging. So banks are willing to engage with crypto companies more, but it doesn't mean they'll bank with you. But I think at least you can have conversation with some of the larger names now. I think that's sort of the point two. And I think the point three that I want to make is basically, it goes back to sort of why we need to drive more adoption. Like, for example, we invested in a company in Australia called Travel by Bit. In Brisbane, they're doing this like 12-week crypto challenge where basically you can go like spend 3 months in the Gold Coast in Australia without using banking, right? So and I think like native crypto is sort of like something that I think is going to come. But so for banks, you know, they're I don't know. It's just like if you look at the U.S., you know, like Silvergate, they've embraced, you know, crypto, and they're. But the thing is that that's also like to a certain extent a single point of failure in the U.S. If Silvergate's shut down, then the entire fiat crypto trading in the U.S. kind of like gets banned. But the thing is that I think as you're gonna see more banks becoming, because I think, and because I think all you need is, like I said, you need 1 or 2 successful case studies of banks of successful relationship building between a bank and the crypto industry, and then that provides roadmaps for other smaller banks to follow. So I think it's coming.
I think so. So again, our experience is a bit different because we're a regulated company. So we've always sort of had partnerships with a lot of banks because you need multiple banks to just custody customer assets, etc. But I think sort of, again, looking from the big picture, this industry is the bank industry killer. This industry will kill eventually a lot of the banking industry. And right now, there's a lot of fear in the banking industry, both from an economic point of view to sort of participate in the game, and also from a regulatory point of view, because there's a lot of regulatory uncertainty in the industry, and banks are relatively very conservative. I think that banks that actually sort of cross the wall into this space are very important, because without them there's a huge gap between sort of fiat into crypto, which also creates the importance of stable coins. And we are seeing more and more banks who sort of look at the larger regulated companies and are willing to sort of work with them and explore how can they use the technology, what can they do with the technology, how can they participate. And I think it's important and will eventually happen, again, because this industry will eventually sort of eat the banking industry. Blockchain industry is starting to eat and will eventually sort of completely eat the banking industry.
So this goes back to the earlier point that I made about going above and beyond regulation. We have a patchwork of banks, and we can offer 19 different types of fiat currencies. We're very, very well banked. So one of the things that we can offer is two-sided trade. So we can match on our platform, but we can also take two-sided trades. So if a client wants to do renminbi, Bitcoin, they can do that on our platform. If they want to do Japanese yen, Canadian, Aussie, British pound, they can do that. I do think that stablecoins have a really important role to play, especially with the velocity of moving money throughout the globe. But to Yoni's point, the fiat area is still an important necessity for most for this space to really grow. I mean, institutions are going to enter the space if they can get money in and out. People still have to use fiat. So I think it's an important piece, and we're very well banked.
Until they won't need it.
Thank you very much, guys. It was a pleasure having you here. Thank you. So see you soon.
Cheers. Thank you very
Thank
much.
you.